Hello and welcome everybody to today's edition of Mexico News Network's Breaking News Business. I'm your host, Elliot Bullman. Remember to follow us on all our social networks and to catch us every day by logging onto our website, mexiconewsnetwork.com, for relevant stories and news. Let's start with today's show. The latest Bloomberg poll showed Donald Trump locked in a dead heat with his Democratic rival heading into the first televised debate on Monday, a result that caused markets to grow skittish after a streak of relative calm. The CBOE Volatility Index closed up 18% to 14.5 in its fifth largest jump of the year so far. The S&P 500 slipped 0.9% to 2,146.1. The debate, particularly in the first half when the focus was on economic and trade issues, delivered on the promise of volatility. While the candidates devoted much of that portion of the debate to ad hominem attacks, they did address trade, infrastructure, investment, taxes, and monetary policy. Perhaps the sharpest exchanges were over trade, an area where Trump has staked his claim as a tough, America-first realist. He repeatedly attacked Clinton based on the fact that her husband signed NAFTA with Mexico and Canada into law in 1993. He pilloried the agreement as defective and as a single worst trade deal ever approved in this country. Trump pointed to the loss of manufacturing jobs in states such as Michigan and Ohio. While these states have lost manufacturing jobs, their unemployment rates are both below 5%. Trump cited the specific example of Ford Motor Company's recent decision to move some operations to Mexico. Both candidates addressed the need for infrastructure investment, with Trump likening the US to a third world country. For her part, Clinton predicted that some country will be the clean energy superpower of the 21st century, and if elected, that country will be the US. Clinton then segued into a discussion of Trump's views on climate change, pointing out that he had previously called the phenomenon a Chinese hoax. He denied this. In November 2012, however, he tweeted, "The concept of global warming was created for and by the Chinese in order to make US manufacturing non-competitive." Trump attacked Clinton for advocating one of the biggest tax increases in history, while Clinton tried a couple of times to coin the phrase trumped up, trickle-down economics, a reference to the belief which Democrats broadly reject. The policies that benefit the highest earners help the economy as a whole. Trump claimed that his tax cuts would be the largest since Reagan. Following the Republicans' release of his third tax plan on September the 15th, the same organization estimated that his plan would cause the national debt, currently $14 trillion, to swell to 105% of GDP in 2026. Clinton's plan would cause it to rise to 86%. Under Clinton, the deficit would expand by $0.2 trillion over the same period, while under Trump, it would expand by $5.3 trillion. Trump accused the Federal Reserve of doing political things, presumably by keeping interest rates at a historically low target range of 0 to 25 basis points for the 6 years to December 2015 and keeping them at a range of 25 to 50 basis points since. He implied this loose monetary policy had reinflated the bubble that caused the 2008 financial crisis. Clinton was not always convincing in her attempts to rebuff Trump's attacks, but in general, she displayed a commitment to facts and policy substance that Trump lacked. Referencing the birther myth, Clinton turned the decision over to voters. Just listen to what you heard. We did not hear much about the minimum wage, equal pay for women's work, or profit sharing, policies that Clinton mentioned in her opening remarks but didn't get the chance to address. So far, it looks like round one goes to Clinton. Moving on. Enrique de la Madrid Cordero, head of the tourism ministry, highlighted the work to strengthen the relationship in the tourism sector with Japan, which is interested in increasing the flow of travelers to Mexico. During his working trip to Asia, the federal official said that the commercial relationship with Japan is important, especially in tourism, because it offers great advantages for both countries. In recent years, the number of Japanese tourists visiting Mexico has increased. We're also working with tour operators and promoting our destinations so that more Japanese visit us, he said. He announced that in February, a daily direct flight from Tokyo to Mexico is expected to start operating, in addition to the existing ones, which reflects the importance of the bilateral relationship. In a meeting with the Minister of National Land, Infrastructure, Transport and Tourism of Japan, Keiichi Ishii, de la Madrid reaffirmed the interest of the Mexican authorities to increase the frequency of direct flights from Japan to Mexico to increase the number of tourists. Meanwhile, Keiichi Ishii said that in order to increase the number of Japanese visitors to Mexico, connectivity between the two countries is an important element. The Japanese official agreed that the business relationship between the two countries is highly relevant. The head of the tourism ministry said that so far in 2016, more than 150,000 Japanese tourists visited Mexican destinations, and in the next few years, the number will increase significantly. Within his agenda in Tokyo, the tourism minister inaugurated the Mexican Pavilion at the Tourism Expo Japan 2016 fair, in which executives of the Japanese Association of Travel Agents participate. JATA is one of the fairs of higher prestige in the global tourism market, which offers the industry the opportunity to present Mexican destinations to the Japanese market, as well as other nations. In other headlines, following on from our report last week on the peso crisis, analysts are not ruling out a further decline in the value of Mexico's currency owing to external economic factors. Analysts agree that the current volatility of the peso can be attributed largely to external events, such as the possibility of a restrictive fiscal policy by the US Federal Reserve towards Mexico, the upcoming US elections, and the ongoing volatility of the international price for oil. However, the mood of market participants is also being influenced by economic events arising within the domestic environment, chiefly the federal government's 2017 spending budget and the current financial deficit. The Mexican peso crisis is partly due to the recovery of Donald Trump in the election, as he recently gained ground on Hillary Clinton and surpassed her in the state of Ohio by 5 points, according to a survey by Bloomberg. Ohio has traditionally been viewed as a decisive state in recent election run-ins. The Director of Economic and Stock Market Analysis for Banco Base, Gabriela Siller Pagasa, stressed that there are some key elements that could further affect the peso-dollar exchange rate over the coming weeks. For example, she said the publication of a rise in the level of US crude oil stocks, opinion polls favoring Donald Trump, plus optimism from the EU over whether the Fed will raise interest rates before the end of the year. The final quarter of 2016 will be the most complicated in terms of defining some key events, like the US election, which will determine the long-term exchange rate, she said. She also warned that if Trump wins the election, the peso will face strong upward pressure, resulting in a decline towards 21 or 22 pesos this year, ultimately reaching 24 pesos per dollar in 2017. And finally, turning to the money markets. The Mexican peso has strengthened against the dollar by the most in 7 months, recovering from a record low in the previous day, as foreign exchange markets reasoned Hillary Clinton edged out Donald Trump in the first US presidential debate. The Mexican peso was up 1.5% per US dollar around 9:50 a.m. London time. The Mexican peso changed down 0.86% during the last week, was up 5.76% during the last month, and up 15.13% during the last year. Mexico's IPC index changed up 1.97% during the last week, down 0.25% during the last month, but up 12.79% during the last year. This was all for today. Thank you for staying with us. I'm your host, Elliot Bullman. And remember to follow us on Facebook, Twitter, and Google+. Log on to MexicoNewsNetwork.com for more information on Mexico and the world. Until next time.